Hello everyone, how are you feeling with the recent sell-offs in the stock market? Bloodbath, massacre, carnage. I am running out of vocabulary. I am sure you are also wondering when will these sell-offs end. In this video, I will not be attempting to call or predict the bottom, but I will mentally prep you on some of the prices that we may see if a true capitulation happens. In addition to that, I will provide information on areas where I think are good entry points for some of the mega cap stocks. Also, as per my last few videos, I will help to break down what happened last week in a simple and easily digestible manner, and also share my view on the market outlook ahead. Anyway, I will be traveling next week, so there won't be a video in the next weekend. Therefore, I hope I can provide more information in this one. And if you like such videos, I hope you can help me with the like and subscribe buttons. I'm hoping the YouTube algorithm can help me in reaching out to more viewers and investors out there. Alright, here's a quick summary of what happened last week. Per my previous video, the market was expected to have a relief rally, but I wasn't sure how long it may last. And as it turned out, the rally didn't last for more than 2 days and the stock went down after Tuesday. Got to be honest on this, I didn't expect the rally to be such tiny bit. But this shows that there are very few buyers right now, and it is evident that institutions are not stepping in to buy the dip at all. Then, at one point on Friday, S&P 500 actually entered the bear market territory, which is at least 20% down from the recent high made on 4th Jan 2022. In my view, when S&P 500 kisses the bear territory, it is very bearish and it may go further down. But as always, stock market doesn't go up or down in one straight line. Similar to last week, after such massive sell-offs, investors can expect some form of relief rally entering next week or the week after. In my last video, I have mentioned not to be too eager to chase any rallies as the overall trend is still down, and so I am going to take this chance to remind again. Anyway, in that video, I have provided some resistance levels where the major stocks need to break above for bullish confirmation. So now in this video, I will paint a worst case scenario. In other words, if a true capitulation happens, what are the price points we can be expecting to see? Okay, here's the game plan. I will classify them into two key areas. First area is the blood in the streets area, where investors in their 20s to 40s should be really excited as it is massive buying opportunity. And the second area would be coming out from retirement area, where people who are already retired like your parents would want to come out of their retirement to pump their money into the stock market. Anything below that, I think it would be coming out from the grave area where the dead would also want to invest. Okay, now let's move on to the technical analysis portion. First up, I would like to share that in my view, the recent months of sell-off does not represent a capitulation. Personally, I think if a real capitulation were to happen, we may revisit the highs before the COVID crash. So for SPX, we are looking at around 3004 to 3005, which is another 10 to 30% sell-off in the broader market from here. Coincidentally, the 200 moving average for weekly chart falls within this range as well, at around 3460. Looking at the Fibonacci retracement level, the 50% is at 3005, and in my view, if we were to get a capitulation, the bloods in the street area is around 3004 to 3005, and the coming out from retirement area is around 3002, where the 61.8 Fibonacci level is. And if we were to see the bottom of COVID crash, I would think even the dead wants to invest. So when we translate this to SPY, the ETF, it means we could revisit 340 to 350 range, and maybe even 310 to 320 range if a real crash happens. If S&P 500 drops to these levels, it means that we are giving up all the gains that we have gotten since the recovery from COVID crash back in March 2020. Sort of restarting everything all over again. Hence the title of this video, The Lost COVID Years. And the reason for this, in my opinion, is because the Fed has pumped in so much money to bring up the economy and stock market in the last 2 years. So now they are taking this free money back together with the market makers. As they always say, don't fight the Fed. So if the Fed wants the market to go down, to take liquidity off the market, and to take cash away from investors, they will and they can do it. I have shared this in my last video, which you can check out in the link on top and in the description box below. Once again, I want to remind that I am not predicting that a capitulation will happen, because it may not. But if it does, at least you are mentally prepared to see those levels that I have mentioned, and hopefully not too stressed or alarmed by it. Next, something that caught my eye is that as the market continues its sell-off, VIX remains unfazed. As shared in my last video, I was expecting it to bounce off the support at 25, which it did on 17 May, Tuesday. But the highest it went was only about 33, yet the market created new lows. Interestingly, I saw this tweet, which says since 1929, no bear market has bottomed without at least a 200% plus spike in VIX. But to be factually correct, VIX was only introduced in 1993, so I'm not sure if the person has done some backtesting. Nevertheless, the crashes in recent years do show that VIX needs to get above 200%, and mind you, we are currently sitting at 130% only. Well, I guess there is not enough fear in the market yet. In my view, VIX may have to go above 40 if there is a real market crash. Okay, the last soldier has fallen, and that's Apple. As I've always shared, if the market wants to go down, it has to bring Apple down with it, as well as Microsoft, and we are seeing that now. In my view, the 200 moving average of 159 and 138 to 140 are very crucial support levels, and Apple broke below that in the last 2 weeks, showing massive weakness. As you can see from this chart, it has 4 major support turn resistance to break above to turn things around, namely 140, 150, 156 and 159. If we have a relief rally next week or so, I am expecting it to get rejected at one of the resistance levels and then fall back down. Okay, zooming out to the weekly chart, it is also showing us a bearish sign as it broke the long-term upward trend which was started in September 2020 as shown by the green line. It is currently sitting on 100 moving average, so let's see if that can hold in the coming weeks. In my view, I feel it's a good time to load up some shares, which I have done it at 140 and 133 in the last 2 weeks. Moving forward, if capitulation happens, here are 2 key areas that I will be watching out. The first blood in the street area is around 120s. To share, there is a little gap between 119 to 120. Then, the other coming out from retirement area would be 95 to sub 100, as there is a gap between $95 to $99. If the latter happens, which is about 45% down from the recent high of 179, I cannot imagine how bad the broader market will look like. That will then represent a real capitulation and massive blood in the streets. Moving on to Tesla, it doesn't need a rocket scientist to tell you that it is currently very bearish and it has fallen more than 10% last week. To highlight, there could be an incoming death cross where the 50 moving average crosses the 200 moving average, which is yet another bearish sign. Meanwhile, there are not many support levels in the $600 range. Maybe, perhaps $600 can serve as a psychological support, after which the next support level would be around 540s range. And I think this is the blood in the streets area. Finally, you have this gap at 412 to 433, and in my opinion, that's the coming out of the retirement area. Anything below $400, I think all the dead investors would want to come out of their graveyards to invest. Now let's have a look at Microsoft. On the weekly chart, it closed below 100 moving average of around 260, which is a bearish sign. If the market wants to go down in weeks or months to come, I am expecting Microsoft to test the 50 and 61.8 Fibonacci levels at 238 and 213 respectively. Switching over to the daily chart, if you have followed my previous videos, you will know that there isn't much support between 220 to 270. So if a capitulation happens, Microsoft will likely go to the consolidation zone of sub 200 to 220. Do also note that there is a little gap at 244 to 245, which acts as a magnet for the stock to go down. So anyway, the 2 areas to watch out are the consolidation zone as well as below 185. Next, Nvidia. The bear flag pattern was drawn a while ago and it seems like it followed the pattern and went down. So what's next? The stock needs to go above 207 and 230 resistance levels to be bullish, but before that, the first level to clear is around 178. And if there is going to be a capitulation, I believe Nvidia will be rejected before reaching 207. The 2 areas that I will be watching out are the consolidation zone between 115 to 155, followed by below 185. To also share, there are 2 gaps to be filled in the consolidation zone, which once again can act as a magnet to pull the stock down. Now let's move on to Meta platforms, aka Facebook. Similar to Netflix, the company is facing lots of headwinds. Therefore, if the market crashes, my first blood in the streets buy-in area will be the pandemic low of about 137, followed by sub 120s. However, do note that the stock has been severely oversold since the start of the year, which means many institutions and retail investors who wanted to sell the stock would have done so. Those who waited till now and decided to sell are likely paper hands who just want to lock in their losses. Anyway, I'm not sure if the stock can go that low, we shall see. Finally, Alphabet, aka Google. This will be a quick one as I have covered in my previous few videos and nothing much has changed. 2005 is still the huge resistance level. For blood in the streets area, I am looking at just below $2,000, where there is a gap between 1949 to 1990. Finally, the coming out of retirement area is the other gap between 1659 to 1694. Here are my end thoughts before I see you guys again in 2 weeks time. In the bear market, no company is spared. All the major companies have to go down before we see the bottom. But a quick disclaimer again, I'm not saying capitulation or a huge crash will happen as I cannot predict the future. We may or may not reach those low prices that I have mentioned, and so be it, it's good for long-term investors like me. But I know it can be a nervy moment for newer investors. Therefore, I'm doing this video to mentally prepare these investors that the market can still go lower if they want, so that they won't be too alarmed or shocked when they see those low price points. For me, I have missed the COVID crash, the dot-com bubble, the GFC, etc. So I am not gonna miss this one. I mean, have you wished that you had bought some stocks during those crashes? If yes, here you go, this is your opportunity. If a capitulation really happens, this could be a life-changing moment for me as a long-term investor. Opportunities come in frequently. When it rains gold, put out the bucket, not the timber. This quote by Warren Buffett pretty sums up my view right now. And in case you are not aware, Warren Buffett loaded out $600 million worth of Apple shares in Q1 this year when the stock was in the 150s range. So if you have managed to buy below 150, you have gotten a better deal than him, and hope that makes you feel better. Anyway, jokes aside, while others are fearful about this market, I am extreme greed for fundamentally strong stocks like Apple, Microsoft and Tesla. Yes, I may look stupid to buy the deeps as the deep gets deeper, but I believe this also happened in the dot-com bubble crash or COVID crash, so only time can tell. At the end of the day, it is important to do your own research, stick to your own plan and don't get affected by external noise. I wish you good luck in this turmoil period, and I am quite sure investors with longer time horizon will ride out this wave. Okay, that's all for this video. If you found some value in this video or if you think it's useful in helping you to make sense of what's happening in the stock market now, I really hope you can hit the like and subscribe buttons. They mean a lot to me and will keep me going. Thank you very much.